Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today we will take a look at the New Zealand dollar. This may be a bit curious choice for just brief view, but actually guys, there is a reason why I have chosen the Kiwi for today's video and for the weekly research. As you know, on last week mostly we have got the levels and the patterns that we have discussed. So as we have suggested, the upward bounce on the euro currency has happened. The market has done this precisely from the level that we have discussed on the daily chart. So as soon as market has reached the 111 area and is completed, it has formed reverse head and shoulders pattern and has completed immediately on the bad non-farm payrolls data, the target. It doesn't mean that market will not continue to move higher. This retracement will become a bit deeper, but the pattern that we have specified in the weekly research and in general the analysis that we have made mostly has been completed. The same we could say about the Australian dollar. As the double repo has been formed as a result of non-farm payrolls, this double repo buy on the daily chart that we have discussed also has been completed. So, but on the New Zealand dollar, it's a bit different situation, and the major difference stands in the place of this recent rally in a bigger picture. So if we will take a look at the weekly chart of the euro currency, for example, you will not see something special real there. And this will not tell you something clear. But on the New Zealand dollar, those of you guys who are tracking the New Zealand dollar analysis, you know that on the weekly chart, we have uncompleted ABCD target that stands at the 71.50 area. That's very important because recent rebound, recent rally on the New Zealand dollar becomes the part of this larger analysis, and this again returning back to life an idea that market really could continue to move higher and hit this target finally to complete the logical destination. Because in the recent behavior on the New Zealand dollars was really rational, so we see this double top has been formed on the New Zealand dollar market recently, then drop. We start to think what to do with the target that was not completed. Then it was turning to some sideways curious consolidations. Also was unclear what to expect because our signal for taking the short position has not been completed, and for some time we just have abandoned the discussion of the New Zealand dollar, waiting to the clarity. Right now, the situation becomes clearer, and it seems that we finally should get the completion point of our long-term weekly analysis. But this is not yet not the end, guys. This also, since New Zealand dollar also trades in relation to United States dollar, it gives the hint what to expect on other currencies that also has dollar relation. I mean, euro currency, Australian dollar, Great British pound, and so on. Great British pound is a bit different story, but still, as New Zealand dollar has the clear target just above the top, and it clearly hints that the upward action should continue just to complete this target, because market stands to this target as close as never. This in turn gives the hint that on the other currencies we also should get some continuation to the upside. This continuation could be different in different currencies, in different degree. Maybe somewhere it could be just minor continuation. On other currencies, it could be significant continuation. But the fact that we probably should get some another leg to the upside across the board. And here we come to my choice. Why I have chosen the New Zealand dollar? Because only the New Zealand dollar right now has definite target. Definite upside target, and this target stands at 71.50. All other currencies do not have these targets. That's why As you can see on the New Zealand dollar, overall situation is much more attractive for trading, since it's clear it has definite targets, it has definite levels to watch for, and in fact, New Zealand dollar has almost completed, almost in place, long-term trading setup on the weekly chart. And this setup is bearish, so we're searching the chance to take the short position. That's why I suggest you to read our weekly research to understand what we see on the weekly chart, on the monthly chart, because in this case you will get the whole picture in your hand. And we will take a look at daily chart as usual in the video, and what to expect in the Monday, maybe right in the beginning of the week. So as you can see, this upward action has started after market has started to form this wedge pattern that should be broken in opposite direction. That has happened. So wedge is a reversal pattern. On the upward action, market has moved above the weekly pivot, monthly pivot point, and the moving above the monthly pivot suggests that we have the bullish sentiment, and this moving above the monthly pivot point suggests the further continuation to the upside. Right now, market stands very close to the resistance. First of all, this is daily overbought that market has hit on the bad, on the poor non-farm payrolls data, and also it stands very close to the monthly pivot resistance one. This combination tells that we probably on the next week should get downward bounce. And this in turn leads us to the idea that the most probable pattern that we could get within the perspective of the 2, maybe 3 weeks is the butterfly sell. Why? First, because the extension of the butterfly, this 127 target, stands at 71.50, precisely corresponds to the target of the weekly pattern that we have. Strong weekly resistance and the yearly pivot point. Second, as we expect reversal here to the downside, butterfly is a reversal pattern. And the appearing of the butterfly precisely at this moment looks absolutely reasonable. And finally, third is that this retracement will support the possible shape of the butterfly. Since this could become the left wing, retracement will start the right wing of the butterfly. Okay? So that's our thought currently on the perspective on the New Zealand dollar. On the 4-hour time frame chart, guys, what else we have? This picture looks very bullish. So you can see this was our bread and butter trade. As you can see, bread and butter is a continuation pattern, so very often leads to the just further continuation of the trend, not just to the minor target that has been hit on the next 4 hours here. As you can see, so I can congratulate those of you who are taking the long here with the bread and butter, starting precisely at the trade level that we have discussed here. So right now, as you can see, the market has reached the 1618 extension of the wedge swing. So we don't have any other targets here. Maybe you could try to build this ABCD, lightning bolt ABCD pattern, but it's too steep and BC leg is too small. So I do not like such sort of the ABCD patterns. But probably you could call it as the ABCD if you want. Anyway, market at daily overbought, and we expect getting some retracement. On the way up, market already has broken all fib resistance from this top to this bottom. All fib levels have been broken. That's why it's also points on the bullish sentiment on the market right now. But most important thing, guys, here is the breakout of this black line. Why? Because this black line is a neck line of the double top pattern. And this breakout is not just a breakout of some support resistance areas you could see, but this is also the fact of the returning inside the body of this pattern. Usually, when the market returns back inside of the body of some pattern that has not been completed, leads to the failure of this pattern. And failure of this pattern could happen only if market will take out to this top. So it means that the price returning back inside of this body is relatively confirmed that market should continue to move higher. So this is relative confirmation sign of the further upward continuation. You can see that top matches to weekly pivot resistance one as well at 70.55. So this is in general supports our thought on the possible further continuation to 71.50 target. Now, what to expect on Monday? So somewhere on Monday, maybe market will reach monthly pivot resistance one first. It's right here, 69.85. Just 30 pips higher. Maybe not. But anyway, retracement down probably will start. And we think that most probable destination of this retracement stands right here. Confidence support the 68.50. This also will be neckline, the same neckline, and an area around weekly pivot point the next week. In general, any retracement while market stands above 66.75 will be acceptable for us, because any retracement here will keep initial butterfly swing valid. But taking into consideration current action, too small retracement is unlogical here because market at overbought. Too deep retracement will mean, for example, if we suggest retracement to the weekly pivot support one, well, it could happen, but in this case, market will have to return back again below this area. And currently, this will be not quite normal behavior. That's why it seems that most probable retracement will be somewhere around 68.50, 68.65 area. So between the weekly pivot point and confidence support on the 4-hour time frame chart. That's the first step that we're waiting for on the next week. And after that, we start to watch for larger butterfly that could be formed on the daily chart.